I'm having PK here is because I've personally worked with him. He does great work, and it's close to me because that's how I did my first deal. So if you all would please put your hands together for Mr. PK Patel.
All right, thank you guys. Man, this isn't intimidating at all. All these Sox fans. I'm contending with the Cubs World Series, and you guys are all here. Thank you so much. Much appreciated. Give yourselves a round of applause. So, I'm not a public speaker either. So go easy on me. I'll try to keep it light and entertaining and educational, and hopefully you guys get value out of this. All right, so first topic. You guys are probably wondering, who is this guy? And what have I gotten myself into? So I'm going to tell you a quick story. I started real estate investing back in 2006. I see some of these looks like, oh my God, you're a dinosaur. 2006, 10 years ago. So I was not of drinking age when I closed my first deal. In fact, I'm going to introduce my business partner here pretty soon, and he was even younger. So we'll talk more about that. 2006, how many of you did any deals back then? It's a different beast, wasn't it? Get a short sale under contract, negotiate it, you have a payoff letter, you have like 5 buyers waiting for you, right? And you walk out with $30,000 to $50,000 check. Yeah, those were the days. So everything was going well. I was doing real estate investing on a part-time basis. I still kept my full-time job. I had security issues. Just I wanted to make sure I don't go broke. So everything was going well, and then a couple years later, what happens? Crash and burn. So predominantly what happened was the funding dried up, right? So because of the lack of funding, we had to come up with an alternative source to fund our deals. So we got really creative, and we used to buy properties and there'd be no buyers a lot of times. So a lot of those quick flips, you couldn't do them anymore. A lot of the subprime lenders were gone, and they had title seasoning requirements. So based out of that necessity is how we founded Midwest Corporate Credit. We basically found it out of accident because we were still doing deals, we were still doing flips, and a lot of our counterparts, our competitors, I mean, they're not really competitors, but our counterparts, they went back to their corporate jobs and they just couldn't fund their deals anymore. And they found out we were still in business and we were still flipping houses, and they wanted to know how we did it. So out of that, in 2011 is when we got started. All right, so what is unsecured business credit? It's a line of credit or any kind of a credit account that's established under the business name. So that's a little bit different than a non-PG, which means personal guarantee. These lines are still personally guaranteed, however, they're under the business name. They're unsecured, so there's no deposit or collateral required. They're predominantly going to be based on several factors on your credit score, so on your credit profile. So what I'm going to talk about are revolving lines of credit. So balances can go up and down. You could leave them open and you could use them over and over. So how many of you would like that? So it's not a closed-end loan. No restrictions on use. I know there's a lot of companies out there. They will get you into programs that help build your DNB profile. You know, they'll get you these vendor lines that you can only use at Shell or Target or Home Depot. We're talking about actual cash. So what I'm going to cover is bank lines of credit that you could use anywhere. And I'm going to talk about accounts that come with a 0% introductory rate for 6 to 12 months. How many of you would like that? Yeah. All right, and I'm going to talk about accounts that do not report to your personal credit. So they're going to be personally guaranteed. If you default, they're going to ding your personal credit. However, as long as you maintain them in good standing, they're not going to even show up on your personal credit. All right, so why is business credit important? It keeps debt off personal credit, so your FICO score isn't negatively impacted. So just like I covered in the previous slide, it's kind of a repeat. When your FICO score is low, you pay higher rates and fees, and there's more paperwork, right? I've had clients who started a flip, and then they wanted to rent it. That was their exit strategy, but they got denied for long-term financing because they maxed out personal credit cards. How many of you had that issue or know anybody that's had that issue? Yep. All right, so I'm going to talk about a solution to that. You can build business credit to be more bankable when you get on the commercial side of things later on when your business grows. And accounts will typically report to corporate Experian and commercial Equifax. Those are business credit bureaus that banks will report to. So how can using personal credit be harmful and handicap your business? Let's look at a case study. So we had this client that came in January of 2016. He started his business at the end of last year, and he used $12,000 in personal credit cards to fund his basic startup expenses. He came to us in March, and he had 12 grand in revolving credit card debt. We showed the client how to pay that down strategically, and we got his FICO score up 50 points in 50 days. So here's his report, and this is on March 10th, 2016. I know for some of you it's hard to see. Here it is after, but this doesn't really mean anything to you guys. This one does. Okay, so the top is his tri-merge scores on March 10th, 2016. And then the bottom is what happened after you went through our program. How many of you prefer the bottom?
Now that's personal or business?
So,
Is that a personal score or a business score?
that was a business question, but this is a personal score. All right, so I'm going to talk a little bit about the different business credit bureaus. So Experian is a big player on the personal side. They're also on the business side. So now I'm going to switch over to the business side. So corporate Experian. It's got basic information, your SIC code, your NAICS code. Basically, those are just industry classifications. And since you guys are mostly real estate investors, it's going to have something to do with real estate, whether you're a property management company, a realtor, or an investor, or a holding company. So that's what those codes are. You don't have to know them in depth. It's not very important. Liens and judgments. So trade line type, amount, and balances is what's reflected on this report. It's not going to show you, so when you pull a personal credit report, it's going to show you Wells Fargo, for example. You have a mortgage with them. Here, they will not show who the vendor or lender is. Simple reason is because they don't want your competitors pulling your credit report and see who your suppliers are, right? It's a simple 3-page report. This is corporate experience, probably one of the most basic credit report there is. Scoring model, it goes from 0 to 100. So you have FICO scores on the personal side. Here you have their score, which sometimes is referred to as a PAYDEX, but that's a term used by DNB. So it's not really a PAYDEX score, but it's very simple, 0 to 100. The higher it is, the lower risk you are. All right, so the next bureau is is Commercial Equifax. And this is the 800-pound gorilla in our industry. They are they are most widely used in small business banking. They have more in-depth information. It's going to have brackets of your gross sales. So, for example, it'll say 0 to $500,000, $500,000 to $2 million. It's going to have some kind of a range of what the gross sales of your company are. It's going to have historic payment history, and a lot of times it'll have who the owner / guarantor of accounts are. Okay. They have 2 different scores. It's a more in-depth scoring model, basically a credit risk score and business failure. So how likely is your business to fail within the next 2 years? And again, I'm going through this really quickly because it's not something that you need to know. It's good background knowledge, so that when you do go get some of the larger lines, you know what to look for in the future. See what I mean by competition? I see a lot of phones coming out. What happened? Who scored? So, don't worry. Knowing the Cubs, it was just a base hit.
You're on the north side.
Hey, I like the Cubs, but
1-0 Cubs.
all right. So, how many of you have seen programs online that show you how to build a DNB profile? And you've been to either seminars or where they pitch you how to build your PAYDEX score and get an 80 PAYDEX score. Well, I'm not here to say that it's complete garbage, but it's going to help down the road. But as a real estate investor, it doesn't really mean anything. DNB is predominantly used for business-to-business transactions. So, for example, Staples, the office supply store, giving you net 30 terms and giving you a card that you could walk into Staples, swipe it, and basically that can only be used at Staples or Home Depot or a gas card or whatever. So basically, there's a myth out there. If you build it, they will come. That's the myth with DNB. So if you build an 80 PAYDEX score and you have all these, phase 1, phase 2, phase 3, and finally phase 4 accounts, which is bank lines, the theory is that you're going to be able to get business credit, a bank line of credit, without a personal guarantee. So, unfortunately, that's not true. Unless you have a company that's doing at least $10 million in revenues on an annual basis, I don't know of any banks that will consider a non-PG loan. or a line of credit, even a small one, or even a non-PG credit card. I haven't seen it. Some of them will do 5 million. They'll consider you a mid-sized company, but you know, for a real estate company where you know you're flipping houses, that's you know, that's hard to do. They use a DUNS number. With the other two use an EIN number to keep track of your credit profile. Paydex score 0 to 100. 100 is the lowest risk. 0 is the highest risk. The cool thing about DNB, and this is where a lot of the DNB gurus is they'll show you how to build a profile and use the self-reporting option that DNB has. So what that means is if you currently have different accounts under your company, you could pay DNB several $100s and send them statements of those accounts. They'll call and verify those accounts, and they'll back report all of that information to your DNB profile. So you could have a business credit card that's like 7 years old, and you could self-report it basically, but it's going to cost a lot of money to do that. And unfortunately, it's rarely used in small business banking until you get to some of the higher tier of lending, the $5-10 million in revenue loans. So it's good to have, but it's pretty much for real estate investor, it's a novelty. All right, so what does all this have to do with all the tea in China? Where do I start? Great question. Start at the beginning. All right, so first thing you need to incorporate. What kind of business? I can't tell you that. That's between you, your attorney, and your accountant to figure out. But basically, these types of companies, anything that has a separate EIN is going to be beneficial to you. My suggestion would be to avoid anything that sounds speculative. Investments, real estate, holdings, land development, or anything else that sounds speculative or high risk.
How come? Why is that?
The question is, why is that? Because as you grow, the first thing an underwriter looks at on the application is your company name, right? What you don't want to do is immediately give them, if you're going to be a serious credit builder, my suggestion would actually be have two different companies. Some kind of a management company and your regular holding company. The holding company is high risk as it is because it's an investment firm. So you could name that whatever you want, but your management company could be such and such management or ABC and Associates. Something that sounds like it's a mainstream business, okay? Now ultimately it's going to come down to if you're going for a large product, a large loan, or anything that's about $100,000 and above in one lump sum, unsecured, they're gonna ask, they're gonna look at your SIC code and your NAICS code, and that'll determine your industry anyways. So, but anything under that amount, it's a nice little loophole that you can use is just keep your company name sounding simple and low risk. Yeah.
What if you already had your company name already had investments in it?
Then yeah, that's not a big deal. I mean, you got to kind of weigh the options because how old is your company?
Like 10 years.
10 years, yeah. So that history is a lot more important than the name. So you can change the name, but at this point, I wouldn't suggest it. Continuity is probably a little more important. Obtain a tax ID number. All right, so the better your personal credit is, the quicker you can get this program going. So the best way I could explain this is when you guys got out of college, you had no credit, right? So a parent had to co-sign your first car loan. Essentially, you're doing the same thing as you're borrowing credit from the personal side and lending it to your business, okay? The only difference is what I'm going to show you. The loophole is that credit is not going to report on the personal side. All right, so some things that banks don't want you to know. So what they don't want you to know is their reporting cycles. When they report and who they report to. They're not going to tell you that. They don't even tell a lot of their lower level bankers at the branch level on the retail side what it is. So if you were to walk into Bank of America or Chase, for example, and ask that business banker, number one, where is this business account going to report? He's not going to have a clue. They don't tell him that. So everything we've developed is through trial and error and our own research and development, basically. What they won't tell you is you can get perpetual 0% balance transfer checks that have a 3 or 4% fee, and then they'll give you a 6 to 12 month balance transfer at a 0%. How many of you like that? And they're not going to tell you their underwriting guidelines. They'll tell you the basics. You need a minimum of 720 credit score, but they won't tell you exactly what they look for. I've had clients get declined at 765, even though their guidelines are 720. So I've been told. Who is Midwest Corporate Credit? We're a commercial credit consulting firm. We're based in Oak Brook Terrace, Illinois. We work with businesses in a variety of different industries in all 50 states. And we have relationships with high-level commercial bankers and underwriters from a variety of different financial institutions. What we do is we're constantly tracking lending trends. Like recently, there's a certain bank that did something that wasn't very good. I'm not going to name any names. Yep. So how did that affect the business lending? It's our job to keep track of that and guide our clients around those landmines. We specialize in unsecured business financing. We do checkbook line of credits and commercial credit cards. And we work with startups as well as established companies in all industries. How many of you have other businesses that are mainstream besides real estate? Okay. What kind of businesses?
Just computer consulting.
Computer consulting? So that would be a great example. And I'm sorry if that's not what you said, but we'll use that as an example anyways. So a computer consultant or an IT consultant would be someone that offers services and has billables. That's something that would be a good candidate for a line of credit program. So our line of credit program, this slide I'm actually going to have to deviate from it a little bit, but we have two types of products, predominantly for real estate investors. It's going to be the commercial credit cards. You have to get the starter accounts in place before you could move on to some of the larger lines of credit. So I'm just going to keep it basic.
What's a starter? What do you mean by starter line of card?
So a starter account is like a business credit card, for example. The type of credit that you could write checks out of, a line of credit, it's fundamentally different in the sense that interest is assessed on a basically a daily basis. It's prorated. It doesn't come with any kind of a 0%, but it's a little more liquid. So there's trade-offs. Usually comes with a little bit higher amount as far as limit. So those types of credit accounts are going to come later once the base accounts are established. They also have industry-specific lines of credit. So any doctors or chiropractors in here? No? But they have a lot of lenders that we work with. A lot of commercial banks will have programs that are catered towards licensed professionals. So I try to tweak these slides as best as I could to cater to you guys, but I forgot some information in there that doesn't pertain to real estate investors. I apologize.
So what are the rates on the line of credit? 3%, 11%?
It would depend on, that would depend on your credit. So I'll talk about that a little bit more towards the end. Startups are welcome. What can the lines of credit be used for? Startup or working capital, marketing expenses, travel, rehab portion of your projects, education, real estate investing programs, and possibly acquisition. There's an asterisk there because there's certain things that you have to do in order to be able to have it fully liquid. And I'll cover that a little bit later. So I'm going to show you a sample balance transfer check, and this is what it looks like. All right, so this says 0% until April of 2018. There's a one-time fee of 3%. How many of you like to pay 3 points to get 0% interest? Okay, and this isn't a teaser offer, it's not a new account. I've had this account for 5 years. So that's the amazing thing, is these perpetual balance transfer checks that the banks will send you if you hit a certain metric. And that's what we coach our clients on. So I'm going to show you guys 2 examples of cost of capital. This example is if you borrowed $100,000 at 12% and 4 points for 6 months. So it's a basic deal, $50,000 purchase, $50,000 rehab. First of all, a hard money lender would require you to come in with a down payment, which we're not even accounting for. So you're going to have to use your own cash anyways in this example. But in order to keep the numbers round, we didn't budget for that. So at the end of the day, your cost of capital is going to be $10,000. But if you do a mixture of financing where $50,000 comes from a hard money lender and you use your own business credit lines that you obtain through us at 0% for the rehab portion, you're going to save $5,000 on just this one deal. You see how that works? No?
How much would it cost to get the business line of credit?
It's a great question. I'm going to cover that in a later slide.
No, but it pays for itself on the first deal.
Yeah. So it doesn't end there. I'll give you one of the deals that I recently did. Okay, so the address is right there. This was 100% financed using business credit. Okay, and here's a before picture. Now, everybody close your eyes and imagine what it's going to look like after and see how close you were. Are you ready? Same house. And then here's some more after pictures, and they're purely for your amusement. All right, so let's go through some of the numbers.
How much did you make?
slide. So here are the numbers, fix and flip numbers. Round it to the nearest $1,000 for easy math. We like easy math, right? $75,000 purchase price, and I purchased it on January 25th of this year. $115,000 rehab budget. This was a big budget rehab. We redid everything. The only thing that's remaining is the roof was in good shape and the 4 walls. Everything else it was a complete gut. Okay, $7,000 in utilities and property taxes. And I only paid $6,000 in financing cost. Okay, now, had I done the same deal using a hard money lender, 12% and 3 points, is that pretty typical? So, yeah? Okay. So, $6,000 in points, and $18,000 for 9 months worth of interest, right? Because it's been 9 months now. We're going on 10 months. My guys are really slow, so if you got any contractors out there, grab my business card. So $24,000 cost, right? So right now it's listed for $299,000. Let's say it sells for $299,000. It's a $96,000 gross profit using the type of financing that we consult our clients on. Or if I had used hard money, I would have made $78,000. Would you like to keep an extra $18,000? So I want you guys to not get me wrong, okay? I think hard money is a great resource, but I'm a part-time real estate investor. So I do maybe 1 or 2 deals a year if I'm lucky, Even the blind squirrel can find an acorn once in a while, right? So full-time, I actually assist clients in setting these up and manage our banking relationships. So a lot of our clients, what they're doing is they're taking our program, mixing it with a hard money lender and using it as gap funding so they could do 3 to 5 deals at a time instead of just 1. Because now they have down payment for 3 to 5 deals. And the amount of leverage that you could apply is absolutely staggering. It's all depends on your situation and what you're comfortable with, but I have seen a lot of clients just apply that type of leverage, and it's got to be done on the right deal. I'm not saying go out and leverage every single property to high hills, because that's kind of dangerous too. But and I'm sure there's some hard money lenders in here. They'd be able to tell you more about what down payment requirements are and things of that nature. So what does it take to get started with us? We prefer that you have a personal credit score of 700, and if you don't, we can show you what to tweak in order to get it up there. Ideally, low inquiries and few accounts opened recently. So if you have a lot of brand new accounts, that's going to hurt. Ideally, excellent payment history. If you have bankruptcies and judgments, because the program is unsecured, they tend to not like second chances. So, because if you default, if you need a third chance, there's nothing to grab onto, right? I mean, it's an unsecured program. So, higher personal credit card limits is going to get you much further in the program.
How high?
As high as possible.
10,000, 20,000?
What, can you go back for a second? You had 10%, what are you referring to, that revolving debt? The third bullet?
Oh, the third bullet.
Yeah.
So we like to see lower credit card debts. Remember the example I shared with you guys, where there was a 50-point increase in 50 days? Well, that's because his personal credit cards were leveraged really high. And I know $12,000 is not a lot of money, but based on the amount of credit he had available versus the $12,000, it was a high percentage. Yes?
Recently added accounts, what is recent in your?
Within the last 12 months. All right, so our application process. Very simple. You fill out a one-page pre-qual, send it back with your credit report. We'll assign an account manager, and it's likely not going to be me because I'd be up for the next 4 days pre-qualifying all you guys. So we've got about a dozen account managers, and we'll assign some of our best to you guys. We'll evaluate your personal credit report and the business information that you provide, and give you a funding projection. So we'll say, all right, we could get up to $80,000 in business credit for you. And we'll give you some kind of a range, like 60 to 80 or 80 to 100, something like that. And then our application is literally about 4 pages, and a lot of it is disclosures. So it's only two-page application, and it could be done via DocuSign. Very simple. And then we go to work for you and get the capital you need. And then once we're done, we charge you a setup fee of 10% of the amount that we get approved for you. And that's a one-time fee. Those accounts are yours to use for as long as you want. So for example, let's say we get 5 different accounts for you, $10,000 each, $50,000. That'll cost $5,000. But now, let's say this time next year, you get credit limit increases and double those. Those are your accounts to keep. After that, we're done. And our fee is a one-time consulting fee. So we're basically offering you guys a long-term financing solution with a one-time short-term fee. So I'm going to open the floor up for any questions.
What's the duration on your application process from start to finish?
Great question. So the duration on our application process is about 30 days. So what we'll do is when we get your app, we'll put all the data into our system, and it'll match you up with the lenders, and it'll bring up the ones that are most likely to approve the application, and then we'll send those out. Some of them require an application to be signed on their own letterhead. So our system will spit out an application to your email. You sign it, send it back, and the whole process from start to finish takes, on average, 30 days. Yes, sir.
Since we're starting with credit cards, do they all come with the convenience check so we can get the money where we need it?
So at the beginning, you're going to get balance transfer offers. Not all of them will come with actual checks.
So then how do we use the money?
So
You can't go to a closing with a credit card.
So what we recommend and what a lot of clients have done is when the accounts are new, you want to use you want to use them for rehabs. That's what you did, right?
Well, a little trick you guys can do is you can set up a PayPal account, pay yourself in PayPal through the credit card.
You gave away my secret. No, I'm just kidding. So we have like 8 different ways that you could get cash in your bank account, and we share that with all of our clients. So depending on what type of accounts, and the reason I'm not getting too detailed is because the types of accounts that you would most likely get approved for are going to be different than the gentleman in front of you. So it's a very custom program, and it's hard to get into details on someone's specific situation, here from stage.
But there is a way.
Yeah, there is a way, definitely. Yes, sir.
So in the case that we either don't get approved or we choose not to accept that line of credit, is there any fee?
So if you don't get approved, then there's no fee. So it happens maybe 2% of the times where we give someone a funding projection and we don't hit it. So if we give you a funding projection, we're likely going to get there. If the accounts are all declined, which I've seen, because someone might have a derogatory on their business credit report from like 4 or 5 years ago that they didn't tell us about. We don't pull business credit reports because they're extremely expensive to pull. The corporate Experian report will cost $100, and Equifax is even more. It's about $250 for a report. So in order to keep the cost down on the front end, there's zero cost on the front end to the client, and sometimes that'll happen where there will be some kind of a circumstance from the past that we didn't know about, and a client will get declined for everything and bomb all the apps, and in that case there's zero fee to the client.
Yeah, there's a lot of companies out there that do corporate credit, and a lot of them don't do that, where they'll actually charge you a pretty hefty upfront fee.
So the other half of the question though is if you do get accepted for a line of credit, but you choose for whatever reason not to accept it, is there still a fee associated with the service?
Yes, there is.
Is it the same fee?
Yeah, it would be the same. Yes, ma'am.
So after the 6 to 12 months at 0%, what does the rate need to be on that?
That'll depend on your credit. The typical range is from between 9% and 15%. So, but what we'll do is we'll show you how to, what you need to do in order to get checks like the one that I showed you on a perpetual basis. I get those on a monthly basis. And there's a certain way to service the account. If you pay the minimum payment, or there's certain things that'll trigger you to be flagged as high risk, and there's certain things that if you pay down the account in a certain way, in a certain period of time, and follow that pattern, it'll trigger these balance transfer checks over and over again.
But we have to be a client in order for you to share that information.
Yeah, because each bank has their own criteria. We work with about 150 different banks all over the U.S. Yes, ma'am.
So if someone should apply for the credit, get the line of credit, 10% has to be paid upfront, or does that come out of the line?
It would be on the back end. Once, once the product is delivered, only then we charge you. Yes, sir.
The 150 banks that you do business with, are they local, national, are they small, medium, large? Can you just,
So, our sweet spot is regional banks because they cover 3 to 4 states. So we've been doing a lot of, I would say probably 60% of our business is regional banks, and then the rest of it is filled in with local banks, and we use retail banks occasionally. It just depends on what our system brings up as a preferred lender for a particular credit profile.
So how would it affect your credit score? I mean, are they hard hits or soft hits, or, I mean, you want from how many different banks, 10, 15 different banks?
Oh no, we do.
Cards?
So the question is, how would going through our application process impact your personal credit? It's a great question. You're gonna incur probably 5 to 8 inquiries. They're gonna be hard inquiries. However, those will eventually fall off. And what's that?
How long?
How long?
6 months?
So Inquiries, if you look at what goes into a FICO score, are only 10% of the pie. Okay, so each one on average, average client, you're going to see a decline of between 2 to 4 points per inquiry. And what we do is, they're not going to be tri-merge. So it's not like we're going to take your credit report, and if you were to get a mortgage and go to 5 different banks, that'd be 15 different inquiries, right? If you count each individual one, because it's a tri-merge. The lenders that are in our database only pull from one bureau. So they're 5 to 8 inquiries, but they're spread out. So each one might only incur a couple inquiries.
So is it best to wait until we know that we can pass the score level, or should we come to you all and you will help us get there?
Great question. So should you wait, or should you start now? The account manager that we assign will let you know what the best course of action is in your particular
Based on the
situation.
report that we provide up front.
What's that?
Based on the report that we provide up front.
Yes. Yes, ma'am.
Just want to warn people that with your application process, there's like a $1 credit check process. Make sure you cancel that credit check information before 7 days pass, or else you get charged $30, $29 from the credit card, the credit company.
Okay, yeah, that's correct. So we recommend using a system called Credit Check Total to obtain your own report. And the reason we do that is because we could pull your credit, but then that's just another inquiry. And if you decide not to move forward with us, why put an extra inquiry on your credit report? That just doesn't make sense. It hurts you guys, right? So we have a way that you could do a soft pull and still provide that report over to us. And what she's talking about is it's on a trial basis, and if you don't cancel it within 7 days, you get charged 29 or 30 bucks. So it's a monitoring service basically that'll monitor your credit, which in my opinion, everybody in here should be on some kind of a credit monitoring service.
Yeah. You can negotiate that down to $1,400.
There you go.
And once you cancel, they'll reach out to you.
Yeah, so there's a lot of tricks to get that down low, and you see her about that. Yes, ma'am.
I just wanted to just give an opinion about the program. I started this program back in May, and I was skeptical. I hear a lot of skepticism with some of you guys, and it's a very awesome program. No, they're not paying me to say this. You end up with, depending on your credit or your personal profile, like I have American Express, I have Chase, I have all the top dogs, and I was really shocked as they were coming in. They would email you and let you know which creditors are accepting you, and Chase and American Express were phenomenal. And they're just like regular credit cards with your business name on it. And so the balance transfer checks and all of those things, it just like you use a regular credit card, it's just the same system. You know, you have a certain amount and you have 0% interest, and then it changes. So it's just like using a regular credit card. So if you're good at using regular credit cards, this program will work out for you. It's awesome. Like, I was really shocked when American Express, I wasn't expecting to get American Express, like American Express for real, and a Chase. So I was really excited. So it's a good program. It's a very good program for anybody that's like a little, you know, like, I don't know about this. I'm here for the second round. That's why I came back, because I wanted to do it again.
Awesome.
What if you already had an American Express or Chase personal?
So,
Or US Bank personal, will they judge you
so
from the personal?
that'd be a great question for your account rep. Because unless we look at it, we don't know. You know, it's like going to a doctor's office without an x-ray. I mean, he's not going to know what to do. Yes, ma'am.
Like for her example, she has all these new cards she got approved for. With each card, she has to pay 10% again. Is that how that works?
Yeah. So it's just a setup fee. So once she's approved and she gets all the welcome packages, that's when we bill. And then after that, you know, if her $5,000 credit limit goes up to $30,000 because she calls in and says, hey, I've been an excellent customer, bump this limit up, that's between her and the lender. We don't have access to that information. And, you know, that $25,000 increase, she gets to keep that without paying us any additional fees. Yes, ma'am.
I'm a client too, and I was very impressed with the services because a lot of corporate lending companies will tell you you have to go out and get a DMV number, you have to have a brick and mortar, and I was just really happy to be able to get business credit based on my excellent personal credit history without going through a bunch of hoops. And John is my account rep, and he walked me through the process of getting credit limit increases, and you know, it was awesome. It's awesome to deal with him.
Yes, ma'am.
Well, I guess I might as well chime in now that I see other satisfied people. I'm also a client. John was great, and yourself, you were on my account.
Thank you.
You know, I think the process is great. One thing that you mentioned with the credit score, actually mine didn't, it went down like 2 points, and it's actually increased considerably within just this format. I don't know how y'all did it, but it really has increased, and the points only went down by 2 points. And I really appreciate you guys, just the feedback that you were giving me about getting it down to 30%, like I was sharing with group 7. You know, a lot of times you think, oh, I gotta pay off this and this before I can apply. And it's like, no, you could pay it down to like 30% utilization. Your score will go up, okay? Because actually when you pay it down, especially if you don't use it, your credit can go down. So just some of the things that you guys were saying, it really helped me get my funding. It closed, and I got the funding in like 3 to 4 weeks. That was in June, and I just closed on my first property in October, 2 weeks ago. So it's only because of you guys. And I'm a new investor. I just started July 29th as a part-time. Well, I was a full-time investor, now I'm part-time. So I'm looking for my second round of funding. It's not even due until January, and you guys did an awesome job. So thank you.
No, thank you. Yes, sir.
Can you tell us how much time your reps spend with clients, like after, you know, it's helping people get increases or additional lines and things like that?
That depends on the client. So it's a.
So if we just call and complain and say,
Yeah.
I need more help?
Yeah, if you start nagging them. they might- No, I'm just kidding. No, they'll be more than happy to assist you.
Okay,
So, and a lot of clients have actually gone through multiple rounds because they want more base accounts and then they build them up. So, we have a client that's gone through like 4 or 5 rounds, and I'm like, dude, stop! I'm running out of banks. Nobody wants to see your application anymore. So, you know, depending on how many base accounts you want, a lot of clients do go through multiple rounds.
And at what round do you go to the lines of credit more than the cards and stuff?
So, typically, you want the cards to season about 12 to 18 months. And then after that, depending on your company, and we could let you know that up front before you even come to the first round, if you're going to be a good candidate down the road for the business line of credit program or not. Yes, ma'am.
What's the minimum and maximum amount that anyone could qualify for? And how do you get the maximum?
Okay.
What requirements are there?
It's a great question. So the minimum I've ever seen is a 0. It was the gentleman that had an issue on his business credit report where there was a charge-off that he forgot to mention to us. So I've seen 0s. It's rare. It's extremely rare. And the largest client that we did in a single round was $280,000.
What requirements did you up to that level?
So he had excellent credit scores on the personal side, and he had a mainstream business aside from his real estate. So he had a commercial cleaning company. So he got contracts with school districts, and he dispatched janitors that were on his payroll And he had these large contracts, and we basically got him unsecured credit based on his revenues, because it was a cash flow type business.
So at some point, they're looking at income to say.
Yeah, yes. So when you start getting into the larger amounts, they're going to want to make sure that you could service them.
What threshold they start looking? 100,000, 150?
So depending on the size of the bank, between $50,000 and $100,000 per account is when they're going to want to see tax returns and bank statements and do all of that due diligence. So, and if you're just starting off and you have no credit on the business side, you won't get to that stage for maybe another 12 to 18 months. Yes, sir.
When you said unsecured, so you're saying they don't collateralize the receivables?
No.
There's no UCC filing?
No, not with the starter products. The UCCs come later on when you get above the 50 or 100 mark. So, does everybody know what a UCC filing is? It's basically a mortgage against your business assets. That's all it is, and it's filed with the state of Illinois rather than the county. Yes, sir.
You mentioned before about paying your the 10% the back end. It's on a $100,000 line. We can only use 90 then. The other 10 we would pay you.
Yes, that's correct. But once it's paid back, you have the full 100 available in revolving. Because all the accounts that we set up are revolving unless the client specifically needs a term loan. Which in real estate, I mean, a term loan doesn't serve you guys, so I won't even get into it or talk about it.
Do you provide term loans?
Yeah, we can provide term loans if you have a business that's a cash flow business where you need such a loan, either equipment or whatever it is. All right, so.
Just say no.
Any other final questions?
One more.
Well, I just wanted to mention the Dun & Bradstreet, because I did set up an account, and it is the credit monitoring one. It was like $220 for the year, but they keep me abreast of my credit score, my business credit profile, and the score going up, because I needed to know that, because I'm new and I'm building business credit. But it's gone up substantially, and then a free LegalZoom account for 1 year, like a business advantage account, came along with it. So actually it's really good. There's a free one, but I don't think it's credit reporting, but it's only like 200 and something a year, and they really kept in contact regarding the coding and the PAYDEX score and everything. So for somebody starting out, it's good to have that.
All right, there you go. So I take back everything I said about DNB, all the nasty comments I made. Just kidding. So if the shoe fits, by all means. If that's something you want to do, go ahead and do it. Awesome. 3-0. Awesome. 3-0. All right, so the next step would be go back there and see one of our account reps and fill out a questionnaire, and we will be in touch. Thank you, guys.
Awesome. Please give PK a big round of applause. Thank you.